From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. This Tuesday afternoon on a day when we did see a little bit of a comeback coming through in markets. Let's check out where the CBA 200 has finished the day's trade, up by around 0.5%. Just having a look at where the ASX 200 is tracking. It is not showing up on my screen because my computer just is having a moment, but I think it is up by a similar amount. A gain of 0.4%, 8,020, and in fact above its 20-day moving average. Some good gains from Paladin Energy. Of course, we had that rebound coming through in oil. So let's get to the themes of the day, and really it was about this Tuesday turnaround. Some good gains coming through from Wall Street overnight. You could call it dip buying if you like, but of course we had witnessed that really terrible week last week. It was the worst week for the S&P and the Dow since March last year. It was the NASDAQ's worst week since 2022. So certainly a few people moving in to buy some stocks, and also of course we had that Apple event I'll get to in a moment, and similar moves coming through here, also helped out by the fact that you had UBS saying look at the banks, buy the banks, CBA and Macquarie hitting records today. Turnaround as well in the iron ore contract, which fell through $90 a tonne yesterday, so that helped out a couple of the miners as well. Now, job jitters, of course, we had consumer confidence, one read today, also business confidence, and the business confidence caught my eye. I'm going to talk to that about that rather with our guest, Grady Wolf, coming up in a moment. But really, these concerns about the overall labour market weighing a lot on business confidence. We are going to get the key jobs number coming through on Thursday. Had a great chat with Paul Brennan from Suncorp about that earlier. You can find that on ausbiz.com.au. Always a volatile series, but an important one, of course, that the RBA will be watching. And Apple's intelligence test. Now, remember when these Apple events used to be so hotly anticipated, as is always the term used. People would stay up to watch them. They'd get up early. It kind of seems like it was a little bit of dull time rather than glow time overnight. I did have a good chat, though, to Hatem Diab from Gerber Kawasaki about it. He still thinks that people that have Apple products are firmly entrenched in the ecosystem, and they will start to upgrade to this new iPhone 16, which some analysts say, look, you can't even tell that the screen is bigger than the predecessor. And of course, you have to wait for this AI rollout. So the new product's coming through on September 20, but the AI rollout won't come through till October. So is that going to test consumers' patience as well, perhaps? Anyway, taking it back to our market, having a look at the banks today. I mentioned CBA and Macquarie hitting records today, and that call from UBS that you should be buying into the banks rather than the miners. They think the fundamentals look better, and of course the banks aren't as I guess predicated to what's happening in China as the miners. ANZ, though, a little bit weaker, and CBA isn't quite at the highs that it was earlier when it was at $145, but still looking pretty good there, up by 0.8%. Having a look at the miners, there was a rebound in that iron ore contract, but Fortescue still under pressure and actually falling through $16. Now, if you believe in this company, which a lot of analysts do, who was telling me earlier in the week that this might be, I think it was James Garish, might be looking like an attractive area to buy Fortescue. Remember, it was at 28 not that long ago. BHP up 0.1%, Rio Tinto up 0.4%. And looking at the energy sector as well, rising along with crude oil, because of course we are watching very closely that weather pattern off Louisiana, which could potentially disrupt US production. So a quick look at some of the top corporate stories. Steadfast, that was our stock of the day, which we'll get to later. We can't really get past this big plunge. Remember, it was in a trading halt yesterday. Then it released a statement to the ASX this morning saying, look, it rejects any suggestions made by the ABC's Four Corners program that its businesses operate unethically. Shares, though, fell by 11%. I was on the call with Rudy, Philippe Van Dijk and Philip Pepe. They're both a hold on this company. They think once the news headlines filter through in the next few days, there's still a lot to like about Steadfast. Life 360 down 8% today. It looked like there was a little bit of insider selling in that stock. CBA Macquarie, I mentioned, at records. And Qantas launching an Australian 10-year fixed rate bond offer. It will yield around 6%. There's been over $1 billion worth of bids already. Let's get though her thoughts now, and welcome to the COB, Grady Wolf from Bell Direct. Grady, I know you were looking at a lot of these stocks as well. What did you think about the move in Life 360?
Yeah, Life 360 is my stock of the bunch all the time against Howard on the call, and it's really interesting to see it's slumped today. It's not actually anything to be concerned about. I have dived into what happened, and it was just a tough night for Life 360 on its US trading overnight on the NASDAQ. And then today, one of the early investors in the company, an independent non-executive director, did sell some shares. It was only worth $3.7 million, so I don't believe it was his whole holding. But yeah, it's, again, any moves in the market right now is likely to spook investors, and any move from corporate is generally what gets investors out of a stock. So it's nothing to be concerned about. It's not a massive holding, and the company is still doing really well and on track for profitability. So I know Bell Potter still has a buy rating on it.
Now, when it comes to the banks, they did really well. As we mentioned, CBA and Macquarie at records. It was interesting that UBS note, buy the banks, don't buy the miners. But there was a little bit of a rebound in some of those miners too. What took your eye today?
Yeah, definitely. Well, China's obviously the kind of key stimulus for all of our miners right now. And they continue to say over time, we've got this material stimulus coming, we've got this money coming, we're going to put money into our dire property sector and our struggling property sector. But it's all news and noise. It's no material amount of money. And so every time there's a slump in the iron ore price, or steel demand output looks pretty bad, or news breaks to the world that someone in China or the advisory board has told steel mills to stop production or cut output, then that's what flows through to the iron ore price. And we've seen that overnight yesterday, and the advisory board exactly that. Another update saying, hold off, don't increase your output just yet because of subdued demand domestically. But that's flown through to our miners yesterday. And then today, obviously, there's this material stimulus coming out again. It's just a tale of to and fro at the moment of the iron ore price in China. But again, we've seen China's data come out yesterday. Their GDP didn't grow very much. It was below economists' expectations. Their PPI fell as well. So it is still a really tough time in China right now. And that's really flowing onto our miners, especially the big miners in the iron ore space. But what I really did enjoy the UBS note today about buying the banks over the miners. To be honest, it's not wrong. The banks are offering so much more return for investors, and the miners' material stocks have been really beaten down recently, and they are driven by that commodity cycle, which is really heavily hit right now. So I definitely agree with UBS there.
Yeah, indeed. Yeah. All right. What about the overall macroeconomic picture? I mean, no high-level data today, but we had consumer confidence. We're still a little bit gloomy. Business confidence there. That's really a worry about some of the moves in the labour market, isn't it?
Yeah, I think the labour market is a key driver of the business confidence slide today. It was expected to fall 1 point, but it fell 3 points. So naturally, businesses were really worried in August, and I can't see that changing anytime soon because we have these unemployment rates. It did go down, but we have obviously GDP was the big concern recently with it coming in subdued and below economists' expectations of just growth of 0.1%. And so that just says that there's a lot going on in the economy. There's a lot the government spend is driving the economy, but with us, it's where all of our household spending and all of our household savings are so low right now. We're not spending on anything. I think Aldi and Kmart are everyone's favorite place to shop right now for the deals. So it's a really tough time right now. So naturally, business confidence is not looking great, and it's kind of as to be expected. But I think Westpac consumer confidence today, it came in at a fall of 0.5%, which was less than economists were expecting of a 1.2% decline. So I think consumers are a lot more optimistic than businesses, but understanding the whole flow-on effect. Like I spoke with Koshi the other day at a mining conference, and he said a line that was so true and something that kind of mirrors the sentiment of the market right now is that a lot of people who have been unemployed or who have lost their job are yet to make the statistics of the unemployment rate because they've just been filtering through their redundancy packages or their savings. So I'm expecting, and I know Koshi's expecting the number of unemployment to go up soon when these people do run out of money and need to go onto Centrelink and other government support. So I think we are in for a bit of a tougher time to come, and GDP last week definitely spoke to that, and so did the data out today.
Oh, well, that's a bit a negative note there, Grady. Let's talk about a positive note. You've got an update here on GrainCorp. I don't really know how to segue from those two themes, but trying my best.
Yeah, GrainCorp is one that Bell Potter's definitely updated their outlook on, and they've increased the price target from $9.90 to $10.20 and maintain a buy rating on the leading ag chem. So it's an agricultural chemical producer, GrainCorp. So we've had the June ABARES report, which is the kind of the weather report out for the cropping season. And the June one was at a record high, and the September one's just come out looking even better. So what this says for GrainCorp is that their ag chem and their products are going to be even more needed. They've had a positive uptick in New South Wales and Queensland is quite a big market for them, so that obviously drives some more sales there, which is really good. But this also flows through to other ag stocks, so we'll see Select Harvest, Treasury Wine Estate, all of the other ones. So we've got Rural Funds Group as well. They're looking to really positively benefit from from the ABARES report from September. So we're looking at a really strong summer crop, a really strong winter crop, and overall the crop output for this year's season is looking pretty positive. So I know the farmers will like it, and investors like GrainCorp for that reason.
All right, Grady, always a pleasure. Thank you so much. Grady Wolf there from Bell Direct. Well, the stock of the day was Steadfast. Rudy Philippek van Dijk from FN Arena and Philip Pepe from Shaw and Partners joined me on the call.
I'm not selling today, but I'll have a think about it. I might sell at some point.
So you hold?
But I'm definitely holding.
Yeah, hold.
I mean, I'm not going to sell because some knee-jerk reaction is happening in the market because someone said it simply on television. But we do need to be mindful as investors that things can happen to businesses. Not everything is above board. It happens with businesses, and we have to make our own decisions whether we want to own any type of businesses in our portfolio.
I thought their responses were very rational.
Yeah.
However, it'll be sin-binned for a few days, so I wouldn't. It actually does look cheap. I would give it the 3-day rule, let it sit, let it fester, let analysts downgrade their price targets as they do because the share price has moved. So you'll see some price target downgrade.
You think
my
so?
guess.
You think so?
Do analysts follow the share price up and down with their price targets? I didn't say that. I'm an analyst. I didn't say that. I give it 3 days.
Yeah.
All right, give it 3 days and let the news cycle move along, says Philip. Let's have a look at the market leaders today. Paladin Energy getting a good gain along with Boss on those moves in crude. Polynovo was another standout performer along with West African Resources and Core Lithium. To the downside today, we did see Steadfast, which was our stock of the day, come under pressure along with Life 360. Grady mentioning there's some insider selling. Strike Energy, Pilbara Minerals and Eagers Automotive, and I should point out that Eagers Automotive was actually ex-div. Let's have a look at what we saw in terms of the small end of town. Close the loop there, up by about 11%, and to the downside in the small end of town, Sovereign Metals was the worst performer, down almost 11%. Okay, having a look tonight, the USNFIB Small Business Optimism Index. I also saw what's quite interesting, GameStop releasing earnings. Remember, that's that meme stock that gets a lot of attention, so that will be quite interesting as well. And then tomorrow we have the RBA Assistant Governor Sarah Hunter speaking, along with overseas arrivals and departures for July, and a number of companies trading ex-dividend, including Brambles. You've got IDP Education, Kogan.com, so we'll be keeping an eye on those as well. Just recapping where the market has ended the day's trade. It was a Tuesday turnaround, as we mentioned, up by 0.5% there. On the CBO 200, the ASX 200 is up 0.4% on the close. We just went through the key gains there. So we're sitting around 8,020 and back above that 20-day moving average. All right, well, enjoy your Tuesday evening. We'll do it all again tomorrow. We'll be back from 9:45 a.m. Eastern.